Hello. So I was looking at the charts of gold and I saw this great setup. We had a 30-minute pin bar taking liquidity from the downside, and the 1 hour was bearish at some point but closed bullish, doji but bullish. Then the 15-minute came down, had a fake out, and went towards the upside. Now I was thinking of taking this at the highs or even adding on retracements, but the setup didn't allow me. It actually just flew off without creating a big bottom wick, as you can see here. So we'll wait probably half an hour and we'll see if I have any setup or not. Other than that, let's just solve this issue. Let's just talk about the performance I had yesterday and the lessons I learned overall in this journey. Let me first find the text which I had written. It just come. Yeah. So the first day I lost $34, then made $1,500 the second day, and then the third day I have lost $1,333. So the total drawdown remaining which I do have is $666. This is because all the future firms have trillion drawdown, and whatever losses you have, you cannot make more than $2,000 loss at a time from the top. So even if I made $1,500, it doesn't matter because I had lost $1,333 on the top, which makes my trailing drawdown as $666. I'm still up $134. So let me read that. Up $134. The target remains $2,866. Now, when I started the challenge, I had $2,000 in drawdown and the target was around $3,000. Now it has become 3x more harder because my drawdown is just $666 and target is still around $3,000. So it will require patience and following the rules. These are some of the lessons which I have learned from this challenge. But first of all, I want to show you what were the trades I took yesterday. So these were the trades that were not taken yesterday. These were the trades from past first and second days. Yeah, I took these four trades yesterday. Right. The first one was a loss in the London session. I was short gold. It just I was in the trade for just 3 minutes and 28 seconds, and my stop loss was hit. I was short, and then I saw a fake out happening. I went long and lost $500 approximately. Then, as I took my stop loss the second time, I was like, no, no, this is going down only. It just came out to took me as liquidity. So I went short there with $90 loss. I will tell what was the issue here and why did I lose in 51 seconds. Then I shorted gold and lost $238 in the NY session. So we'll talk about these four trades in detail. The first one, I think the reason I lost this trade was majorly cause let's just say markets were choppy and not the best. And the people who trade like me, we have a community, had similar losses. Okay, so the best and the most advanced traders, experienced traders had this loss with me. Not that I knew they were taking the trade, but after I took the trade, people posted in our Discord or WhatsApp community, and it was pretty clear that markets were choppy. They gave us an entry and went in the opposite direction, or I should say, it took our stop loss and went nowhere for quite a bit of time. Then, when I went long, I had anticipated that price would have faked out from now. So initially, when I was figuring out my bias, I was thinking, well, markets can fake out as well, and markets can go down as well. Then, as I saw a confirmation on the 15-30 minute candles, I went short, but I stopped out. So then I saw a confirmation on the 15-minute candle, a long pin bar, which was pointing up that the price will go on towards the upside. So I took long on the breakout side. Let me show you. So this was the first trade I took. The 1 hour had broken out. The 4 hour had broken out towards the downside, and I was like, nice. We have a clean range towards the downside. We can trade in this range. One mistake I had done was I had put my stop loss above the current candle on the 15 and 30. You might not be able to see it, but it was also the 30-minute candle. So as this candle broke the low, I was like, it should go down with all this volume, but it first came up and it also closed bullish. So there is that. At the end, it did go in the direction, but not what I was expecting from it. I was thinking that it might fill the entire range, but it didn't. Anyways, so this happened. I got stopped out immediately, almost immediately, in 3 minutes. This candle closed with somewhat of a problematic, I mean, no topic, right? So it was kind of sketchy what price wanted to do next. So I waited for some time. It then went downwards a bit, up, again down, and I traded this candle, right? So let me explain. It went down and it was trying to go down again, but the buyers pushed it up till here. So I thought it was a fake out happening here because of the amount of buyers that were involved here. So I put my stop loss somewhere around here and was targeting a fake out. Fake out had not happened, but I was uh, I was like, if the price does not want to go towards the downside, the only way it can go, or the only area it can go, is upside, right? The mistake I did was the fake out did not happen at this point because the weekly open was just good. So price got rejected from that area and went in the opposite direction. So the first trade was not a big mistake. Yeah, the mistake I did in execution was that I did not put and the stop loss above it, above this candle. and I did not even wait for a steep bottom wick to form, right? These were the execution mistakes in the first candle or the first trade. Then, so the first trade had a loss of $517 with 21 contracts. So another thing that was happening in these two trades was my volume. I mean, if I wanted to enter with 17 contracts, it wasn't entering me 17 contracts, it was doing something else. So I accidentally entered with 21 contracts because of the execution errors that were happening. That's why the losses seem like the losses were bigger than I was expecting, right? Same with the 24 contracts. I was probably entering with 15 contracts here, but it entered me with 24 contracts. I had to close some of them. I closed them live, obviously. So I closed 9 of them probably. Just when I entered it, I closed 9 and I let the rest running. When it came towards my stop loss in the second trade, so when the second trade came towards my stop loss, I was like, yeah, this is going to hit my stops because the sellers were pretty aggressive. I probably closed it earlier, so that's why this is a less than $500 loss. All in all, I lost $1,004 in these two trades. Now, I should have stopped at the first, but I was like, no, this is going to fake out. The mistake I did while I was, let's say, on tilt was that I did not even see that price has this level towards the upside. It has not faked out as in final faked out, right? If price closes above this uh, on the 30 minutes time frame, not even the 15 minutes, then we can think of the price is faking out, right? The another way of thinking about it is we see this downward trend line, which is pretty important to us. It starts from here and it goes on till here, right? So so this downward trend line was not broken yet, right? And I was trying to go long. Whenever we are in downtrend, I think we should wait for the downward trend line to break, like the way it did here, and we had a good up move, or we should wait for a fake out to happen, which I did not wait. So these were the execution mistakes. I was just trying to reverse my position as soon as possible, and these were the two execution mistakes, the mistakes in reading candles, and those were the two losses, right? Then comes the third one. Third one is like I entered with 10 contracts and I was going short. I was like, no, it's not a fake out. The sellers are aggressive now, so I should go short now. So I immediately went short with 10 contracts. The issue that happened was, so I was probably short here. Let me check again. It says short at 2840.3. That was my entry. So 2840.3 is here. Yeah. So yeah, I entered at the break of this low, expecting it to go towards the downside. The issue was that I accidentally closed it. I was trying to set the stop loss, but accidentally I bought it with limit orders. So the the contract or the order just got cancelled. My position got squared off, and I was there with a loss of $90. It could still go towards the downside, and it did not go as expected. I was expecting this whole range to fill, but it didn't. It was to me kind of a surprising move here, and but still it was going somewhere in my direction. I would have closed probably break even here, if not. So I got upset with myself that I am doing these execution errors. So that was the third trade. I stopped trading then, and all in all, these were the three problems or execution mistakes or whatever you can say. Right? None of them were good losses. This was a decent loss for me. The first one was a decent loss. The reason being that other traders were also in it and they were also trying to short the market. Uh, right, but the stop loss was not correctly placed. The stop loss should have been in the range. The stop loss needs to be where it needs to be. So I want, I mean, I shouldn't make these silly mistakes. I won't say even say silly mistakes. These are blunders, right? A trader needs to be patient and the trader needs to do what it needs to do. The long was a terrible mistake. The execution error which happened here on these 10 contracts was an execution mistake. So, all in all, these three trades of London were not good, not up to the par that needs for a. I mean, the level of funded trader was not there, right? Then comes the trade of NY. So I took a break, obviously, did not trade till. So I did not see the charts and this whole action or this whole chop was happening. You can see there is no predictability in the markets. It just is going up and down and up and down, and it's hard to make money from these moves, right? The only continuation is I see is here, where I see three candles continuously, right? Rest all is just garbage, whole chop shouldn't be traded. Then comes the break of the trend line. Here, the trend line got broken, and there is a setup which is called black box setup by Traders Paradise. I do not read it to the full extent. I know what the setup means. I get how to enter it, but I have not traded it extensively. The setup just says that the first time uh, the markets go in a certain direction, trying to break a trend line, they go they get liquidated. So this is the black box, right? This entire thing they got liquidated. But the second time they get to this level, they will have a good move towards the upside. So I could have planned along here. I was trying to find an entry but couldn't. This was a good way to enter if I really wanted to enter, and my target would have been these highs right there, or maybe even these highs. So the full target might have been these highs, and half target could have been these ones. I didn't enter, and I am glad I didn't enter without any confirmation. I mean, the confirmations were there, but I wanted to see the 1 hour retrace into the zone. So this 1 hour candle closed above the resistance we had, and we had a clean range to the upside. So I wanted to see a wick, and I would have added on the retracements, entered on the retracements, and I would add when this 1 hour broke the highs of this 1 hour. The stop losses would have been below this candle. So it could have been a good position. Unfortunately, I couldn't take it. That's all okay. I don't regret missed moves as much. But this was one stupid trade I took. I was overall long on gold, right? So I was long from here. I was trying to catch this move, right? But then the issue was created a 30-minute candle to the downside, right? I was watching a streamer at that point to figure out how he would enter in this condition, right? So I have not watched anyone in all of these past trades, but in this trade, I was just looking at him, trying to figure out how he would trade in this type of situation. He trades similar to me and the way I trade. I mean, I have learned from him. So I was like, let's see. So he was trying to think of a short down from here. So when the 15 broke the previous candle's high, he was thinking that we might go short for an eventual long, right? So first we could have gotten into short positions up till here, probably targeting this resistance or support, and then we could have gone towards the upside. Then according to my analysis, I was like, the 30 has closed at support. I mean, this is the support, right? So this is a whole consolidation range, and it shouldn't go to the downside. The 1 hour same closed above all of this resistance. This was a crucial level, and nobody could close above it. But the 1 hour closed it, right? Still, when this 30 closed bearish, I was like, let's see. It's a possibility that it might go down, right? I was thinking if it creates an high, breaks the low, then again breaks its high and then breaks it low. I was like, it would go down. I did not follow that plan. That was the first mistake. The high wasn't broken again and it broke the low. So I shouldn't have entered according to my plan, but I did. The reason I did was I saw aggressive selling here. So because of that aggressive selling, I was like, yeah, it can go up till here. It wasn't a big move, right? I wasn't risking too much. It was just a current candle stop. So the current candle stop was a problem. Overall, if you are thinking of entering on the current candle, it should have too much of volume and trading against the trend. So and that was something. The changing of bias for me without any reason. The 1 hour had closed bullish, right? So should I have I should have thought that we should be bullish. Same was with 30 minutes. It closed above the range, this above this consolidation. So why should I think of shorts here? And they say that whenever gold wants to move in a direction, don't go the opposite direction, because you will get destroyed, you will get obliterated by it. And that's what happened with me. I got stopped out. I lost around $230. Yeah, $240. Another thing was I was thinking of having my stop loss around $200. Shouldn't have risked more if I thought that I was going to risk $200. So whatever amount I was thinking, it was higher. And $40 might not seem a lot, but I am in drawdown. I just have $666 now. So every dollar is important, right? Then what I was eventually expecting happened when I got stopped out. I knew that there is an 80 or more than 80% chance that price would just shoot up from here, right? Because it triggered sellers who wanted to sell and then hit all those stop losses of those sellers. And this 15 had closed bullish there. So it meant that the 1 hour was just creating a bottom wick to go towards the upside. And when this 15 closed, when this 15 closed bullish, I could have entered here, but I didn't, cause in when I was starting the NY stream, I had set a rule for myself that I would only have one loss per session, and because of that rule, I followed my rule. So here I did not follow my rule or my plan. I went against the trend, but I was like, if I have already had one loss, so I shouldn't have more than one loss, right? So the next trade, even if it had more than 80-90% chance, or I could, I was like, yeah, it's going to go up. Even then, I didn't trade it. So the last thing I did was not trade, and I think it was probably the only thing that went right, that I did right in this whole session and even this whole day. That's it. But there must be some lessons I have would have learned. So let's go over those lessons. Lessons learned from this challenge. So I am going to talk about day three mostly, but the lessons from day one and day two are kind of also included. If I remember anything else, I will also add it. The number one lesson is trade the trend. Don't enter against the trend just because of a candle. I did it twice and got stopped out twice. One in the fake out trade, the second trade which I took on the day in the London session, and I just entered thinking of fake out, but it didn't really fake out, right? So if it doesn't fake out or break out, you shouldn't enter it. The same happened in the invite trade, the last trade I had, right? Second, follow risk management more than making profit, because we are in drawdown. The trailing drawdown is probably one of the worst things in a funded account, right? I am up $134, so I am not technically in a drawdown. I am above the 50,000 level, but still I have lost money from the top, so I will have to uh, like I have lost money from the top, so I will have less drawdown remaining in my pocket. That's why risk management is super important. So we'll have to follow this to the T. Wouldn't even risk $1 up from what I am expecting to risk. Follow the rules, especially max losses in a session end. I did follow it eventually in NY session. Obviously, did not follow it in London session and had three losing trades. But yeah, follow your rules, especially max losses in a session a day. I have one loss for a session and 2 losses for a day. It makes you more patient if you have such statements or such rules, because you will also only fire when you see your target. When you are 80 to 90% sure that this is going in my direction, it will hit my TP. So you won't waste your bullets shooting into nothing, right? You would make money if you follow this rule. Trade during volume times only, no escape trades. So some of them, the past trades were risky. Not even just on the day three. I had risky trades on day one as well. So this is the issue. So trade during volume times only. I think I have mostly did during volume times, but the London session yesterday was too choppy, and I won't say it had good volume. No risky trades, obviously, only banger ones. So if we just trade one, just have one trade per session, it will be good, and we would take the best trade, right? Only base hits, no home runs. So if I am trying to make 5x the risk amount, it's kind of a home run. I I should be wary of that thinking, and base hits win matches. That's same in trading. Wait for 30-minute breakouts. I have talked about it. Same with trend line breaks and retests. So the break on retest was shown earlier before changing bias. So I shouldn't change bias if these things didn't happen. And follow a checklist, write everything down. So whatever you are thinking, your entry criteria, your take profit, your top-down analysis, your setups, you should write them down. And the last point I will be actively trying to do here in the text section. That's it from the observation. Let's see what gold has done in the past 30 minutes or so. Yeah, I have been talking for 33 minutes and it has made an all-time high. That was kind of expected, right? And another thing I expected was come back because of the trend lines that are looming here, this trend line, and also we have trend lines from these highs, right? If I would have taken this position, would have entered here and might have closed something here, or I won't close here, but I would have closed something around here and would close the full position probably here or at the break of these lows. So the another thing, one last thing that I want to tell you about is that the profits I had to I had to hold them longer. I mean, this was a profit I made $421, but I had to hold it for 1 hour. Same was with this trade, $1,055 were made, but I had to hold it for 1 hour and 27 minutes. From now on, I won't hold it as much longer. I want trades that give me $1,000 or give me a good risk reward in 15 minutes, in 20 minutes, in 10 minutes. That's better for me. And obviously, if it's going to stop me out, it will stop me out, and it should stop me out in 10 minutes or so, right? But I I will try to not have losses like these. I won't execute when there is no setup. I won't make execution mistakes like this. So everything needs to be calculated right now. I mean, everything needs to be calculated beforehand, and that's how we can survive this drawdown, which is available to us only $666. The challenge right now is like 3x 4x harder because we just have one third of the drawdown available to us, and that makes it pretty exciting, and that also makes it worth it, right? If any Joe, average Joe, would have made these kinds of profits and would survive it, then why would funding companies exist? They exist for a reason. They exist on the fact that most traders, 99% of them lose, and only the 1% make it. Only the 1% have the capacity to survive such a drawdown. So if I am trying to be the part of the 1%, I will have to manage drawdown, manage risk effectively, enter into good setups, and let the rest be on probabilities. That's it for the stream. I won't be tracking any other trade in this Asian session. I might take trades in the London session if I think they are worth it. Thank you so much. I will rename the stream to something like the lessons I learned and the mistakes I did in this challenge. Thank you so much for watching. It was a good trade, by the way. The spin bar and the 1 hour candle looks so money, so good. This next 1 hour has, sorry, this 30-minute candle also has a chance to continue towards the upside, and the target we can have probably is, yes, we can target this area 2887 or something because of this great trend line we have. 26 86 will be good, I think. 86 or 85, whatever, for the final target. Anyways, I couldn't take the trade because I did not see good retracement to the downside, and I think that's a good thing to do. That's it. I will stop streaming now. I hope any struggling trader has learned something from it.